now. Do, 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 do. All right. It is recording. Okay. So I'm going to start off, ladies and gentlemen. I'm going to talk about the Twitter trade. And I don't just highlight winning trades. I will be highlighting losing trades. I highlight what I feel is an important trade. Right now, Courtney, um, Colton, can you spam Courtney how to do that, if you don't mind? All right. So I'm going to be going over trades that I feel is important. But if you felt a trade was important, and maybe it was a trade you did that I didn't do, or maybe I called out and I didn't do, but you tried it and you made, or you lost and you made, or you made, whatever it is, bring it up. Bring it up. Yeah, right, Diana. I mean, first of all, if I would, you would make real money as a woman or man or a thing. If you're a dog and you could grow a mustache like that, that is just the like. I am so impressed if for anyone who could do that. We have a couple people in the room who could do that. The Colonel can do that. Bing, Colonel KFC. But okay, so let me ask you guys. Um, oh, thank you, Dave. Thank you, Colton. Let me ask you guys. Let me ask you guys right now. Um, how many people here know why I said Twitter's a buy under 39? We should go over that, Seth. Just hold that thought. That's a great question. Not Angela's crystal ball. It was not an algo level. Does anybody know why I said today was the first trade I did, right? Buying Twitter under 39. Why did I do that? Does anybody know? For those who took my master class? Thank you, Colton. So, what I was looking at when I called Twitter long was I started off looking at the one and done. I started this red bar as the first 5 minutes. All right, so here is the 1 minute chart. Here is the 1 minute chart. The first 1 minute chart put in this disgusting red bar. And it fell, and then what was my first reaction? So the first reaction was, guys, I forgot exactly how I said it, but I basically said, guys, there's no way I'm doing the one and done in Twitter. That's it. I'm looking at somewhere else. Then I started looking at Caterpillar for a short through the one and done short, but the stupid options wouldn't open, and then I looked away, and then the one and done worked gorgeously, which I probably would have ignored because you broke the high of the candle. That's another story. So I went back to Twitter, and I was watching this pivot point here. It's an automatic line. It's shared by free stock charts. My pivot points, um, it's the data source is price history. I don't know what it's like on other softwares. But basically, this is what I thought. I was like, Twitter has a bunch of upgrades today. It had a bunch of upgrades. I'll even count them for you. So I just want to share with you. It was a quick trade, and if you miss it, that's fine. But it's more important that you know what happened rather than catching the trade. So it had one, two, three, four, five, six, seven upgrades. Twitter had seven upgrades today. So automatically, I was looking at the one and done long. It put in a red bar. All right, forget about it. Nice try. I move on. But you see this pivot point at 39.06. It says it right here if you can't see it, the number. So logically now, let's just talk logically. If you have higher than normal volume in a name, which 99.9% of the time always happens a day after earnings, that you'll have higher than normal volume. Usually won't do higher volume than the earnings day, but you'll have higher than average volume in a whatever 3 month, 1 month period on the day after earnings. If you didn't know, now you know. So with that being said, if you have a pivot point at 39.06, what is likely to happen on a higher day of volume? If you have a support at 39.06 I'm looking to use and you have higher than average volume, what is a likely scenario to happen? Be more specific. That's correct, Ken. That's correct. Art's right, but flush the pivot and then bounce. So if you're flushing the pivot below 39.06, wouldn't it make sense to you that you would break 39? Yes or no? If it was 39.40, 30, maybe not. Maybe even not even 39.20. Who knows? But 39.06? So all I was using was logic. Why aren't you seeing that higher than average volume? Well, here's the daily. I didn't even look at the volume. I assumed it, and I assumed it correctly. Here is the volume of Twitter today, 29 million. See that volume bar compared to the others? I'm not even talking about yesterday's 103 million. That's obviously higher. You see how the 29 million is higher than average, Angela, compared to these other days? On average, it's one of the higher volume bars. Just the volume today. And so let me take it one step further. Let me take it one step further. Tomorrow's Caterpillar volume, Angela, will be higher than average. Will be lower than today, most likely, but higher than average. And the same thing goes for Boeing. Same thing goes for eBay. The same thing goes for Snapchat. You will have higher than average volume tomorrow on earnings. Than average. Okay. Going back to Twitter, and then I'm going to show you how I did the trade. So I'm thinking logically here. Here's 39.06. Remember when it flushed to 39.12 and then bounced to 39.35? Remember what I said at that point? This is a 1 minute chart from the morning. I said, if it goes up, it's going to go up without me. It's either going to do what I want or I'm not going to be part of the trade. Period. For better or for worse. That was obviously the right move because the stock then fell. And you saw, remember when it broke 39.06, you had that like quick flush. It was like 39.90s, 80s, like that, and then it bounced real quick. Remember that? So when I told you I was watching the Twitter $39 calls, let me just give me a second so I could boot up my software. It takes a little longer to log in after hours. Just give me 1 second. Because I want to show you exactly how I did it. So remember when I was saying I'm watching Twitter here, I'm watching Twitter here, I'm watching the 39 calls here. I want to actually show you what that means. Because I know it sounds obvious, but let me spell it out in a way that actually could be enlightening for people. It would be enlightening for me, too, if I didn't know what I was doing. That's why I think it's a big deal. Come on, today, log in today. Okay, so, oh my God, so laggy. All right. Always at night when you log in. All right, if you see anything on my account that you shouldn't see, don't screenshot it and hang it on your refrigerator. All right, so here, so I type in Twitter, right? And type in Twitter. And what I do is I go to the $39 calls right here. Now, since Twitter is tight, this is all I did. Market. And I'm sitting there with a 50 option order with market to buy. And the only reason why I did that is because of how tight Twitter is. Because Twitter is so tight. That is why I did that. So I'm sitting here while I'm watching Twitter. This is a 1 minute. While I tell you guys this morning, guys, I'm watching Twitter, I'm watching $39 calls. What that means is I had this week's expiration, $39 calls with the size I wanted and a market order ready with my finger over buy to open. Just ready to click it. One click of the button, instantly I'm going to be buying 50 Twitter calls on market order. So I'm just sitting there and I'm watching 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 and I'm watching. And then what happens? Twitter flushes through, hits 3885, bounces to 3890s on the way up. I'm already convinced that's going to bounce over 39. How hard over 39? I don't have a single clue. I click my button with price improvement and everything. The price I believe I paid was 70, well, it was 72 cents. Let's see. Um, okay. I believe it was like 72 cents I paid. Immediately, when the stock was in the 38.90s right here, it popped to the 39.20s. It went even higher. But when the stock was at around 39.15, 16, I immediately just changed to limit as I saw it working. I didn't change to limit right away in this case. When you one and done, you change to limit right away. Not in this case. I changed to limit right away. I looked at my price at 72 cents and I just arbitrarily just threw in a sell at 82 cents. Sell to close. And it ripped up and it got filled and that was my trade. That was my trade. I know $500 is not the trade to hang up on your window. That wasn't the that was important to let you know how I went about it and how I actually executed upon it. I think that's very I don't think people like talking about that because traders out there understand that everyone's software is laid out differently. But, think about it even when you're flying an airplane, and maybe some of you fighter pilots might confirm this, or you're doing something, you need the easiest, the lowest number of actions to execute what you want to execute. All right, certain things might take more actions. You got to do this, 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 this. Maybe you take off. But when it's time to fire a missile or do something or turn the plane, could you imagine when you want to turn the plane? You're flying a plane, you want to turn the plane. All of a sudden, you see a little pop up in front of you, a hologram saying, "Are you sure you want to turn this plane? Are you sure you want to fire upon the enemy? Are you sure?" Let me stop and think about that. Yeah, okay. The conviction level was pretty much shared with you in the morning. It was very low. So if I started with Twitter on a 2 on a pullback, um, look up an image of HOTAS. I want to look up that image. HOTAS flight stick. Oh my God, that is the most, excuse my language, badass looking joystick I've ever seen in my life. Look at that. Oh, is that what it is? Is that what it is? Is that what it looks like? Oh man, similar to yours. Exactly. That's about right. It's almost like playing a video game. It's almost like playing a video game. Wow. So the point I'm making is I was waiting with my finger to buy it as it flushed 39. Now, this is not a trade I want to tout as a good idea, but I think it was enlightening to just see how you prepare ahead of time to buy it. So whatever number of contracts, so you had 10 contracts, you bought 75, sold 82, you made 70 bucks. That's fine. That's fine. Um, can somebody please share the YouTube? Which YouTube link are you looking for? Oh, that one? Thanks, Colton. So that's how I went about the Twitter trade. You guys ready for Tesla? Miriam is like, all right, Mark, that's cute and all, but I want the good stuff. Guys ready? Okay. All right. So on Tesla, what I have done in the past is when Tesla, what I like to say, screws over the call and put buyers, you tend to have a strangle opportunity in Tesla. I don't know how heavy I'm going to go on this idea this time around, but I'll have enough size where I can make a difference. So right now you see Tesla's trading down 36 cents after hours. And pretty much this is what I want to go over. So Tesla closed at 258. The 260 calls and the 257.5 puts would have cost you $18.60. $18.60. Here, let me prove it to you. Okay. Here are the Tesla calls expiring this week. Here are the Tesla puts expiring this week. Here are the 260 calls, the first strike out of the money that you could have bought by the close. The mid-range was 938. Here is the 257.5 puts, the first put out of the money expiring on the weekly. The midpoint being right here, 933. 933 plus 938 is $18.71. So if you bought a 257.5 put and 260 call for $18.71, you are royally screwed tomorrow. You're losing most of your money. We're not even talking deep out of the money. We're talking like you're screwed. Just royally, royally screwed. Now, with that being said, how do I make money off of this situation? What I'd like to do, why is that, Mark? Because the calls are going to lose value and the puts are going to lose value. The calls were expecting a huge move higher. The puts were expecting a huge move lower. Both didn't happen. Unless something magical changes. Look, something could change tomorrow morning. But as of this second, Tesla's done trading tonight because it's 8 o'clock p.m. Tesla is down 36 cents. So when you open up flattish like that, you're killing all the premium. That's exactly right. That's exactly what's happening. You're killing all the premium. So when you kill the premium, what I do is I buy that strangle the next day. Now, here is what I generally do. If I can buy that strangle, I usually divide by 2 and subtract 10%. I'm going to show you something. I haven't done this. By the way, the last time I did this was maybe 2 years ago, and it worked. Doesn't happen often where Tesla opens up flat after earnings. So here is the point I'm making. Let's say Tesla happens to open up where it is now, which is very doubtful, but I'm going to prove a point, which is the point I'm trying to make. The total cost of these calls and puts was $18.71. So what you do here is you take 1871. What's 10% of 1871, guys? It's $1.87, right? You do 1871 divided by 2 minus $1.87. If I could pay $7.48, preferably less, for the first call and put out of the money, when I have done this in the past, I have made money every single time. Mark, what if Tesla opens up at 253.5, still screwing over the puts, way screwing over the calls? What do I do then? What am I going to do then? Your head just spun? I'll explain it again. let's say Tesla opens tomorrow at 253.5. I'm making it up, 5 points lower. What am I going to do then? Anyone care to guess? Matthew is correct. Matthew is correct. So I'm going to go for the 255 calls and 252.5 puts. And I'm going to try to pay now, maybe, sure. Let's do it on the video so everyone can see it, Angela. Absolutely. Okay. Fair enough. Step-by-step instructions of how I do it. Step one, Tesla screws over call puts buyer by opening up to a point where the calls and puts each lose each other money. Let's see where Tesla closed. Tesla closed at 258.66. So Tesla closes at 258.66. First out of the call, first out of the money call and put are the 260 calls and the 257.50 puts. Okay, you with me? $260 call. We're gonna pretend it closed at the mid-end price. It doesn't have to be this exact, even though I make it that way. The midpoint is 938. There was a bid at 905. There's an offer at 970. Let's assume it's 938. 257.50 puts closed at 933. Step 4. Gonna move this gorgeous mug over here. Face only my wife can love. Total price equals $18.71, which is obviously 938 plus 933. 1871 times 0.5 minus 1871 times 0.1 equals, sorry, 748. 5. Or 1871 divided by 2 equals 935 and a half. $935.50 minus $1.87, which was 10% of 1871, FYI, equals That makes sense. Or do what Ken did, which removes a step. Ken's way is the smarter mathematical way. So 748. So here's the final step though. I try to pay less than 748.5. That is the answer. I did the mathematics idiotically or um, unnecessarily long. There's a reason. There's a reason why I did it that way though, which I should mention. In some situations, I'll literally subtract if what happens is if it's less than $1, so let's say the total price between the calls and puts was $1, I'll usually try to pay just a smaller fraction less than 50 cents for them. It's kind of weird. I don't want to go deep into that. Let's just talk about Tesla tomorrow. There was a reason, but there's no reason for me to not say point 0.4 here. So I won't be putting a limit order under 740. I'm going to see how it opens and then make a decision. I'm not going to preemptively do it in the pre-market because you could get a stupid fill when what the spread opens up at $4, $5, $6. Do you want to bid at 748? So I'll look at it first. Now, first of all, any questions on the mathematics? Is anybody unclear about what I'm doing? Fuck, excuse me. I'm sorry for saying that. This is what I should do. Look, let me make it simple. Is that better? No, Matthew. This is not a strategy I've strictly used with Tesla. As a matter of fact, ladies and gentlemen, I'm going to take it a step further with you guys. You could use the strategy on Visa tomorrow. Because Visa, when was the last time Visa reported? Sorry for cursing. Um, January 30th. It opened up lower and then traded in a $2 range. Last time was 1024. They opened up and was in a $5 range. Visa may or may not apply to it. I tend to like names that move, that have major moves. Let's see. Xilinx, no. PayPal. PayPal looks like this one you could do it with. I'm not really sure about Visa. I might not do it on Visa. You want names that can move. Tesla can move on earnings. I'll prove that to you too in one moment. So last time, PayPal had a $3.40 range on earnings between the high and low. Time before that, PayPal had a $3.20 range. So that basically means that if you could buy like a strangle for like a couple bucks in PayPal, depending on the time of day, you don't want to do it like at 11 o'clock as a general rule of thumb. Generally, what I like to do is I like to do it when the opening price crosses. So a lot of times, Tesla's going to open tomorrow, it's going to shoot up or shoot down, right? But a lot of times it shoots up and then it comes back down to where it opened. That's usually where I like to execute the order. So that should be mentioned as well. Also, CMG. CMG, let's see how it's moved in the past on earnings. Yeah, 40 points. And see, let me see CMG's earnings. Last time CMG moved 40 points. 1018. Is that right? It doesn't look right. 725. That looks. Something is wrong with this. Am I looking? Oh, I'm looking at PayPal. Duh. February 6th. Yep, that makes sense. 1025. Put in a $14 range on 1025, unless it reported after. Yeah, it did. Put in a $20 range. Depends. It depends. I mean, you generally put it in 18 to 34, 18, basically 20 to 40 points. So you have to use that into effect with CMG, depending on where they price the options. If they price them at $10, it's definitely worth it. Yeah, I'd buy this Friday. So I'd probably ignore Visa. With those small, all right. So with a $10,000 account, out of the money, how I wouldn't go too deep out of the money. Just lower your size. So for example, if you have to pay $800 for one strangle, you could lose $800, but you're probably not. I mean, you know? So just lower your contract size. You don't have to make $5,000. And remember, I may or may not do this. It depends on how it sets up. I wanted to buy it near the opening price. It could work on Tesla. The one, no, I wouldn't try the one and done on Tesla unless it's up really big or down really big tomorrow. So maybe is the answer. No, just to recap, buy the out of the money strangle on Tesla. If you shorted it tonight, you would have been up money tomorrow. Tomorrow you buy it, Courtney. Simple mathematical statistics that I discovered that worked effectively for me. That's how I came up with the numbers. I would not suggest doing it right at the open, near the open, not right at the open. Not market opens, options are open, take it. No, not like that. The best case scenario is it goes up and then comes down, or goes down and then comes up a little. If it just starts plummeting or shooting up, you might miss it. That's correct. You would lose on both ends. All right. So it is almost 8:30 here, so I will be there tomorrow to do the levels and everything. We do have a very big day tomorrow. Um, okay, Pooty. And service now? Are you talking about service now? Do I think it's going to hold its levels? I cannot add value to that question. I'm sorry. The stock is trading at all-time highs. I wish I had a good answer for you. I'm sorry, I do not. Let me I could look at the numbers, but still, that's not going to do anything. I still won't know. So I do apologize. Yeah, I see 250, 350. I have no idea. Sorry. Hope you guys enjoyed this Tesla strategy and Twitter trade session. Happy trading, make money. I'll see you guys tomorrow morning on the Newsbeat live trading broadcast. Have a wonderful